So, Tyler, you and I went to the Berkshire Hathaway annual meeting a couple months ago, and at the time we went, the stock wasn't doing as well as it is right now. It's now kind of rebounded with the rest of the market, and it's trading for kind of near its all-time highs. It's almost at its 52-week high, and it's about 6% below its all-time high as I'm talking. Um, the stock, it trades for about a 1.45 times multiple of its book value, which is in line with its pre-pandemic average. Um, but the company still seems to think shares are cheap. Buffett and Munger haven't shown any signs that they're stopping buybacks or anything like that. So, what do you think? Do you think Berkshire Hathaway is still a smart stock to buy for long-term investors?
I mean, if it's something you want to hold for a really long time, it's done so well, done well for a very long time. And I struggle to see, based on the composition of its entire business, I struggle to see that eroding anytime soon. I know we talk a lot about, the stock portfolio that they own, especially Apple, because it's such a big position. But if you look at the owned portfolio of like the forever businesses that are there, the utility, the railroad, and the insurance businesses, these are incredibly durable businesses that are likely going to do incredibly well through the cycle, right? Of the economy, what have you, and because of that, you look. I think that that part of the business is just so strong that yeah, you want to own it at any given time. And even though it's like you said, it's close to its 52-week high, we prior to the pandemic, this was kind of a stock that was kind of a laggard for quite some time. And there was a lot of people like, has Buffett lost his touch or whatever? And that's kind of died off again. And like you said, we're right back to an average book value. So, in my opinion, it's for a lack of other really good ideas, this feels like like a decent place to make an investment right now.
Yeah, I would agree, and I would actually go a step further and say there's a lot to like about the stock now that wasn't true in the few years before the pandemic. Specifically, that cash stockpile. One of my biggest problems with Berkshire was having over $100 billion of cash just sitting on its books back when treasuries were yielding nothing. But now it's making 4 or 5% off that cash stockpile, which at 140 billion or whatever they have in cash right now, you're talking $5 billion or more a year in income that they weren't generating before. That's not nothing. The operating businesses have grown. Inflation has benefited a lot of Berkshire's operating businesses that are generating more operating income than they were before the pandemic. And the combination of financial flexibility and the fact that their financial flexibility itself is actually generating yield, it's kind of makes the stock, in my mind, a little more attractive based on its book value than it was before the pandemic. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.